Everyone, welcome back to Red Panda Investing. And today, once again, we're going to be going over another company. This time, we're going to go over Amazon. It's another one of the big tech stocks, and it's definitely one of the big ones out there. And people should probably have done their analysis, but let's see what my opinion is on this company. So, what is Amazon? I, I hope I don't have to explain Amazon to you, right? Amazon Prime, one day delivery, Amazon Web AWS, and all this. Just that web store, they're able to have a venue they have something for streaming, they have something for delivery, they have something things other things going on as well. They have a bunch of avenues for making money. But Amazon, it's a company we love and hate, right? Everyone, it's part of everyone's life. So being said, what headwinds and tailwinds do I actually see for Amazon? Right? Headwinds, obviously tariffs, right? Amazon is one of the biggest importers of items for into the US, right? If you're buying something from overseas from Amazon, they're gonna have to pay the tariffs. There's increased AWS competition. It used to be that AWS was the number one uh, cloud service that you would use if you had a big company. But now Google is in the fray, and also Microsoft is also in the fray, right? Both of those companies are in there. So increased competition is going to be a headwind. Regulations for Amazon, any of the big tech companies at this point, regulation is going to be part of it. There's not much in the way for regulation for Amazon as compared to a company like Google or compared to Facebook or maybe even Microsoft. But Apple, there's not much regulation coming down the pipeline for Amazon, but that is something that could happen. Depreciation is also a big one. Amazon has been spending a large amount of capex into their data centers, which makes sense, absolutely makes sense. They have AWS, which is something they're going to have to spend money on. And they are trying to build out a lot of other items. I know Amazon Hyper for as a competition for SpaceX, for Tesla's not SpaceX, but their internet, right? Uh, Finally, let's get over to the tailwinds, right? What's really nice for Amazon is AI usage, right? AI is definitely a big part of something that's going to help Amazon. If you're going to train AI, right, you're going to need chips, which is something that Amazon can provide for you. If you are going to be using customer service, right, Amazon can use AI to help with that customer service. They can use AI for a multitude of different things as well. It's just not limited to that. They have a lot of applications for AI. Another tailwind for them that is really easy to see is their fastest growing segment actually has the largest profit margin, which is really nice. Right? The fastest growing segment being their AWS, and that has a profit margin of about 35% right now, which is higher than their current margin of about 10.5%, which we'll get to in a second. So that's going to be really nice if you can grow your largest margin segment at the fastest rate. You're going to increase your margins and increase your earnings per dollar overall. All right, so let's take a look at the profit and revenue history. Right, revenue goes up basically in a straight line. It's perfect, and you don't really see much better than this. 10-year median is about 21%, so year after year you're getting the same amount of growth. The 5-year CAGR is at 14%, so it's slowed down a little bit in the last 5 years, but overall, still a great company. You have that giant revenue growth, um, and there's not much to complain about them. The earnings, on the other hand, we do see a steep drop off in 2003, and but then it has definitely bounced right back. This will come back again from what we see in the margins, and their capex expenditure really brought them down into that 2003, 2002, 2003 bear market. But it does look like they've corrected their margins and that the margins are really accelerating at this point. So let's actually take a look at the margins here, right? They're currently at 10.5%. And like I said before, their fastest growing segment is AWS, which has a profit margin of about 35% right now, which means that in the future, it's most likely that the profit margin is going to expand even more than this. We can see that explosive growth in the margins from from 2023, early 2023 up to now, right? Uh, Probably most likely, if you were to extrapolate it out, we probably should start from the beginning of 2020, from that 5% ish, and then just draw that straight line over. That's probably expenditure and everything is done there. So let's look at the PE, right? The 10-year median is at 79, 10-year average is at 82. Obviously, both of these are skewed very much upwards due to the fact that they did have negative earnings and very low earnings for much of 2022 and 2023. So that's going to be something I take into account when I actually look at the ending PE for the company. So let's take a look at my assumptions of where do I think Amazon can go. So I do think that they're probably going to be able to sustain the current revenue growth, right? So 12% revenue growth, which is at the lower end of what of what management is guiding. It is also slightly lower than the 5-year CAGR. So I am pretty confident in saying that they're going to be able to grow their revenue at about 12%, right? They're growing their North America segment, which is their largest, at around a 10% clip. International is growing faster, and AWS is growing even faster than that. So if they can grow their current North America segment by 10% a year, and the other two segments are able to grow a bit faster than 10%, it is pretty reasonable to say that they can get that 12% revenue growth year over year for the next 5 years. As for profit margin, I'm really going to project 11% profit margin. You can argue with me on this one. If you want to argue it higher, I will absolutely agree. This is probably at the lower end for profit margin I see from Amazon. Because that's only a 0.5% bump from where they're at now. And I do project them getting an increased amount of margin because their international margins are very tight right now. It's only at around 4%. And that's going to expand at least to where they're at in North America at about 7%. And AWS has, like I said, a margin of over 35%, right? So if you want to argue that their margins are going to expand because uh, those segments are going to expand their margins and they are going faster, I completely agree with you. I only lower it right now because of the impact of what tariffs are going to do. Of course, you can once again argue right back at me to say, "Hey, Amazon's not going to eat all the tariffs; they're just going to pass it on to the consumers." We did see this fight between Amazon and the White House earlier this year. I don't know how many people remember, but when Amazon was going to say, "Hey," they were about to post how much people were paying because of tariffs, the White House being completely and super mad about it. So that is something that Amazon can also do. So if you want to argue that this 11% ending margin is a bit too low, I would not be angry about it. I do agree that I might have this a bit low, but I do want to be safe with my money. So I'm going to set it at 11%, which really brings it to an intrinsic price of $422.44. That seems, no, my bad. This is the intrinsic price in 5 years, which means that the current price is actually about half of that. So about 220, give or take. So which is a bit lower than the current price. So let's take a look at the free cash flow, right? Now that I've gone over the revenue side, let's take a look at how much money Amazon is actually making for itself. Well, now we see this giant bump, right? It looks like a duck. It looks like a mountain with a valley, deep valley in the middle, and it's going down recently. Is that concerning? Obviously, the growth CAGR and the median look atrocious. But what does it actually mean for us, right? I don't think this is something that you can take and look at it and just say, hey, we see this is what they've been doing the past 5 years, 5, 10 years, and this is what it's going to keep doing this in the future. What this is really telling me is Amazon is willing to spend a lot of money to build up their infrastructure and then reap the rewards afterwards, right? So where do I really think they're going to go with this? I, I do believe that they should be able to essentially, uh, how to put it, essentially reverse course on this free cash flow, right? I don't think that right now their actual free cash flow that we should be marking them off as a starting point should be where they're at now because of the massive capital expenditures they're using for things like expanding the warehouses. So that being said, once again, price of free cash flow, which is something that's pretty simple, right? 10-year median 44, 10-year average 54. Once again, that's going to be inflated simply because of their inflated price, because of the fact that they do have this prolonged period of negative values, negative free cash flow, right? That being said, right, where do I think Amazon's going to stand in 5 years, and what does that value come out as a value for today? So assumptions. This is what I think. I think that they're probably going to be able to grow rev, uh, the free cash flow about 20% clip, which is somewhere between revenue and earnings growth. I The reason I give that is because I do think revenue growth is going to be faster than is going to grow pretty fast. Earnings is going to grow even faster than that. So it's going to be somewhere between that revenue and earnings growth. I'm saying that they're probably going to have a free cash flow of about $47 per share, per free cash flow. Uh, and that's going to be in line with their historical price of free cash flow, which is also in line with a bunch of different companies that are growing at the pace that Amazon is growing at. However, the one adjustment I am going to make for Amazon is I'm not starting them at the free cash flow of where we're at now, but I'm starting them at the peak free cash flow, which we see here at $5.02. rather than the about $1 that they actually have in the trailing 12 months. I do believe that is more representative of where their cash flow is going to be rather than that $1 from today. That being said, altogether, that gives Amazon an intrinsic price today of $307.89, which is higher than what they are at right now. So taking it all together, right? The revenue from the revenue model, what we get is that Amazon has an intrinsic value of about $210.02, whereas the free cash flow you get about $307.89. Overall, I probably would price it a bit closer to what I have from the revenue standpoint, simply because I am making more assumptions when it comes to the free cash flow, like where are we starting it and where exactly do I actually have it growing? So that's why I'm actually my projection for it is probably for intrinsic value is going to be a bit lower and closer to the revenue side at $250. With the current price of about 230, I don't see a good reason to sell it or to buy in any right now. If you are looking for a 15% return per year for the next 5 years, I don't see that. I don't think buying Amazon would be terrible, but I do think that it is not a very great opportunity as of this moment to buy in at too much more. Thank you guys so much for coming out, and like and subscribe if you found this interesting, or if you like the way I did analysis. Let me know what I've done wrong, and if there's anything or any companies that you guys would like me to do analysis for in the future. Thank you so much.